and the JSE gained along the global markets on Wednesday with a focus on the Federal Reserve monetary policy outcome. Investors will be focusing their attention on what the central bank's officials say about where they see interest rates heading in the future. And we're talking now domestically. Let's speak to the Chief Investment Officer at Makwe Fund Managers, Makwe Masilela, joining us now for a quick markets update. Mr. Masilela, thanks for your time. Let's quickly get on to this first. It is a very important day today, particularly around the markets. Give us your quick overview of how the markets are faring in early trade after the Federal Reserve in the United States signaled just one more rate hike this year.
You know, unfortunately, that didn't bode well for the markets. As we have seen that yesterday, it was a very good day. But now, after that announcement, and we are seeing that happening or continuing this morning, we continue to trade in the red. Markets are not happy, all because the interpretation of the markets is that interest rates will stay higher for longer, and people expected that come next year, probably they should get at least 4 cuts coming out of the U.S., but it seems that if it happens, it can only be 2. So that was a very hawkish tone and boosted the U.S. dollar, and unfortunately got stocks to tumble as it is. We just gave back all the gains that we had yesterday when we opened this morning on the local bourse.
Ouch. All right, let's stay with that theme of interest rates, because today we are waiting for our own Monetary Policy Committee's decision on interest rates. What's your forecast for what that announcement might say?
You know, their mandate, they continue to make it very loud and clear that they are here to tackle inflation, and as a result, they even have a target of 3 to 6%. And as we have seen now lately, yesterday our inflation managed to tick up a little bit from 4.7 to 4.8%, but more importantly, we saw our Q3 inflation expectations coming down from 6.5% that was recorded in Q2, going down to 6.1%. The point we are making is that so far we can see some positive impact when it comes to inflation, and at the same time, the economy not growing that great. We know they don't have a dual mandate, but they always say that they consider the situation when it comes to employment and economic growth. So with the economic growth not doing that great, but inflation coming down, meaning they're able to achieve what they are meant to do. So we expect them to pause. And anyway, we've seen the de facto leader, which is the US, when it comes to setting interest rates, also pausing. So that interest rate differential is not going to widen between us and the US. So most probably our guys will consider to pause as well.
Interesting indeed. Okay, so we're going to find out later this afternoon. That decision usually coming at around 3 p.m. Let's then launch into company news. Discovery publishing its results for the year end, which was the 30th of June 2023. And wait for it, they've also declared a dividend. Help us make sense of their numbers.
That's very exciting. You know, as an investor, you only make money when the share price goes up or when the guys also declares a dividend, and we know they've managed to stop paying dividends. So we're excited that they've resumed that, and the guys managed to deliver a robust performance, also with a very strong growth when it comes to their premiums and revenue. And even when you look into their core new business annualized premium income, up nicely 12%, and also they had a positive impact when it comes to retaining customers. You look into their bank as well, continue to attract what we call quality clients, and also you look into the UK business, continue to benefit from a higher premium inflation indexation. Also their global Vitality Global managing to get the right benefits when it comes to the recovery, when it comes to investment returns. So yes, we see their normalized headline earnings per share going up nicely by 12%.
Let's conclude with Remgro also releasing results for the year, which ended on the 30th of June 2023. What stood out for you from their numbers?
Given all these challenges, whether it's interest rates, whether it's load shedding, whether it's people are not too happy with us as an investment destination, high crime level, high corruption level, the guys continue to maintain a momentum when it comes to their earnings. And the guys, they expect their headline earnings per share to go up by 8.9%, and all because of the benefits or positive or higher contribution coming from the likes of our insurance, our Mediclinics, and our First Rent as well. And also they managed to benefit from high interest rates when it comes to high interest income, and also had some gains when it comes to foreign exchange, because remember they had to acquire that indirect stake of 5.4%, adding to what they've already been able. So that also contributed nicely, and it was good for them that we've seen they concluded that deal with Mediclinic, and also that the Heineken Distil transaction, and the guys rewarded us by increasing their dividends by a whopping 60%.
Can I congratulate you on something, Mr. Masilela, because we've concluded now, okay? Your 4IR has held up, sir. It held up very well. I'm not sure I can say the same for my MEC in Mpumalanga there, but thank you, sir. Thank you for your time. Makwe Masilela, giving us the markets update there.